you can go live.
I'm so whack.
Okay, you are live now.
I don't know if I'm alive or not.
Technology is always great when it works.
So whack. Okay, so no echo, nothing. We're
Second
good.
take, gonna do it live.
All right, good morning, everybody. Lights, camera, action. We're doing a YouTube live session this morning, and I forgot to update you on that, Amit. And I'm trying to find my camera, but it doesn't look like my camera is working here. All right, I'm just going to do a quick little pre-market routine. Good morning, everybody. Welcome to the marketinstitution.com. We're doing one of our first live stream broadcast here. I'm getting myself organized. So please bear with me now. I'm not showing the video. All right, so we'll just go on without the video here. All right, so let's go ahead and get started talking about what's in the news. Well, we have Treasury yields, fresh new highs. Let's take a quick look at that as we get going here. Currently, the dollar and the yield, okay, as we watch and monitor the dollar and the yield, we're seeing a little mixed market. Both of these are on 60-minute charts. I'm currently in a trade with the soybean oil that is in our zone. We'll come and check that out real quick. And here we go. Yeah, we have the euro popping up. Rough rice is also in a supply zone. That'll be open here in another 30 minutes. Bean oil also halted right now until the market open. And we'll come back and look over these. Euro just coming out of the demand zone, and also Canadian dollar. We want to watch for those as we as the market starts to open and unfold here. All right, a couple of other things as we start to post out here. Let's take a quick look at pre-market trend. Okay, earlier the pre-market trend was pretty high, indicating a little bit of buying coming into the marketplace there. Pre-market VIX is now back up. Okay, earlier we saw the VIX was lower, implying that some of the fear had left the market. Pre-market indicator, ooh, big gap down. Okay, so as we are putting things together here this morning, it appears that there's still going to be some more selling. Okay, so the things we just checked, we took a quick look at the dollar and at the US dollar and the 10-year yield. Okay. And I'm getting these all mixed up. At the moment, you can see that the 10-year yield is still moving up while the dollar is moving up. So things are synchronized now. When the dollar and the yield are moving up, usually the markets are selling off. Okay. They're a little bit more looking for a little more bearish. Okay. Now what still remains to be seen is what we have coming out. Now, 8:30 housing starts came out. We just had, or just starting right now, Fed Speaker Philip Jefferson comes out. Later on, 9:15, 15 minutes after, he starts speaking industrial production. And then we have 3 more Fed speakers later on today. Okay. Things that are in the news that are driving the market right now, traders are still complacent with the recent pullback, saying, oh, it's just a pullback. Okay. Bank earnings are on deck. Gold is still near the new highs, and all the gold bugs are out there now calling for gold 3,000. Okay. With recent Iran-Israel attacks, oil seems to still be geared up to look for $100 a barrel of oil, which is really going to be a pretty bad scenario for us over here as far as gas prices. Johnson & Johnson, one of the Dow 30 stocks, came out and beat profits, but sales are in a shortfall. Okay. We also saw that United Healthcare came out with earnings and gapped up quite a lot. Okay. Right now, United Healthcare up over 7% in the pre-market. I dropped down to some smaller time frames to see the reverse leg base group of candles. So what we're anticipating is that United Healthcare is going to gap up, which it already is, and we're looking for it to come into this reverse leg base. This is the first area that we will look for some sellers to step in, right about 483, 485. Okay. Now that's a significant bounce back up on the Dow 30 stocks. It's really impacting what the Dow is looking at right now. Johnson & Johnson down $1.55. We have 2 Dow stocks negative over 94 cents. Okay. Now we use the Dow 30 as an odds enhancer as we're looking at the S&P futures and the Dow futures. And what we do with that is we take the number of Dow stocks that are greater than 94 cents, excuse me, greater than 94 cents positive, and we have 4, and we take the number that are negative, -2, and we net the results. Okay. So 4 minus 2, net results 2 positive. Now we take that 2 positive and we multiply it by 2 points. Okay. And we end up with a value of 4. So the cash market is what leads the futures market. So we have come up with a value, a fair value, that cash equals 4, and S&P futures are trading at +7. So S&P futures are slightly overbought relative to cash. A couple other things that we're watching for is that currently S&P is gapping up and it's inside the prior day's trading range. Now, when price gaps up inside the prior day's trading range, we are looking for the fill of the gap. So price will have to go down after the open as we are looking for the gap fill. We have 2 unfilled gaps to the upside. Okay. So as we are starting to roll out this morning and looking at the other pre-market indications, okay, we got the 10-year yield and the dollar, and let's bring up the these moving up, indexes move down. QMI gapping down also implies, and what the QMI is the pre-market indicator for the NASDAQ. Pre-market indicator has a 92% correlation as the trader's sentiment at the open. Okay, and this is for the NASDAQ 100. This is a sizable gap down, implying that there's going to be some more selling coming in. okay? As we look at the trend, dollar sign TRIN, we have a pre-market trend. Things are kind of in a neutral area. And also with the VIX, VIX is now back down. So the pre-market trend and the VIX are kind of neutral, while the NASDAQ stocks are looking more bearish, okay? So there's a lot of moving parts as we start putting things together here, okay? Now, along with the headline news, which often brings in more of the novice sentiment, pullbacks are a price of stocks, market admission. Historically, gains follow this, strategist says. S&P Index 500 extends April slide, breaking a tight uptrend channel for the U.S. stocks. Okay, Bank of America, Morgan Stanley, and other bank earnings join the live coverage. So as we come out to the bank index, we have Morgan Stanley's up, Goldman Sachs up in the pre-market, and we have NTRS, Northern Trust, and PNC Financial, okay? Still very light volume, even though we're about 10 minutes or about 20 minutes away from the market open, okay? Other things to acknowledge with the S&P as we start going down this road here is that the volume is picking up pretty good as we're getting closer to the open, okay? We're still expecting a gap fill. And as we look at the Globex range, okay, 37 points, we compare that to the daily ATR, we see that it's going to be a little choppier market open, okay? Now, when the Globex range is narrow, and narrow is about 0 to 40% of the daily ATR, we can expect larger trends to manifest, an easier trading environment. When the Globex range is in the middle, between 40 and 70% of the daily ATR, see, we're comparing the Globex range to the daily ATR, okay? It's more of a choppier market open. So we want to be alerted. When do we wait to get to trade the open, and when do we just fully engage before the market opens to participate? Using the Globex range compared to the daily ATR gives us some of those clues, okay? Now, if the Globex range is wide, then we employ the bull trap and the bear trap strategy, which means the first supply zone above the Globex high or first demand zone below the Globex low. Right now, we're in the mid-range, so we're expecting more of a choppier market open. And as we compare the daily range, the Globex range, 295 on the daily chart for the NASDAQ 100. NASDAQ 100, 2 days now close below the 50-day moving average. Okay, things are starting to get a little bearish, and we should acknowledge where the 200 simple moving average is as well. Okay. So the range, we got 117 points. So we're more on the narrow side for the NASDAQ. So narrow Globex range, we're looking for bigger trends. Prices gapping up slightly inside the prior session's range. Okay, so we're still expecting that gap fill, and we're pretty close to where that gap fill is at. Okay, there we go. So expecting a pullback at the open on the NASDAQ. Now, the NASDAQ may have the better, longer trending market conditions at the moment, okay, due to the narrow range of the Globex compared to the daily ATR. We're about 30% of that, okay? NASDAQ stocks in the pre-market, really kind of quiet, except for Tesla and Microsoft. Apple, Google, Meta, Amazon are still pretty quiet, okay? So we'll keep close on that. All right, now the Globex range on the Dow, Okay, and this is greatly because of some of the earnings that come out. Daily average true range is about 514 points on the Dow at the current moment. We are 456 for the Globex range. So Globex range on the Dow this morning is a wide range. And with that wide range, we have to anticipate that the bull trap and the bear trap are in play. Okay. Now, this was a prep screen zone from yesterday. We have updated for our new prep screen zones. So I'm going to remove this one. It did work. Okay. We got a nice bounce off of that. So this morning, I do have a supply zone, 338, 330, or 38, 382, 38, 414. So this is where we're expecting the bull trap. This is the first supply zone above the Globex high. So what we're going to anticipate is the Dow opens, moves higher, looking for that bull trap, and then we'll look for the opportunity to take the trade short. Okay. Now, as we look at the S&P, NASDAQ, and the Dow, we have some very different strategies going on here. The Dow with the bull trap, okay? The Globex range is wide. NASDAQ, the Globex range is narrow, okay? So longer running trends. And at the current moment, with the big gap down on the, let me pull that back up here. With the big gap down in the pre-market indicator. Okay, now the pre-market indicator has a 92% correlation as trader sentiment at the open. And right now it's pretty bearish for the NASDAQ. Okay. Now it may look a little bullish for the Dow at the open, and we are prepared to see price break above the Globex high. 38,382, 38,414. We're going to set that trade up ahead of time. I'm going to start off with a couple of micros, and I'm going to set this trade up ahead of time. Okay. So 38,382. And we're going to just take a couple of micros and sell short. Once we're filled, we'll come back in and place our protective stop loss. Looking for prices to come back down. Now, again, Dow is gapping up several hundred points, okay, inside the prior session's high and low, prior session's range. We're expecting the gap fill. So as we are looking at this to play out, the bull trap is one of those places we're looking for the opportunity to take a trade short. Now, we have to keep in mind there's a nice pocket of points up in this sell territory right here. So if price does go above this area, we have to be aware that it could continue to run up, and we also have an unfilled gap to the upside. So just making you aware that setting this trade up ahead of time is a little more elevated risk at this point in time. You can wait for price to come up into the zone and then take it as it leaves the zone, or set it up ahead of time. If you're setting it up ahead of time, make sure that you understand the risk. For a mini contract, it's just $5 a point, and we're looking at about, about 30, 40 points here. Okay, so about a $200 risk on a mini contract. And on a micro, you're looking for a lot less, okay? Or 2 micros and so on. But be prepared. We're still looking for the gap fill. We do have another leg base group of candles as price started moving off of that level. So in a perfect world, price pops up, get the bull trap, comes back down, fills the gap, and we can start to map out the right side of the chart in what we will do to take action and manage risk as we set that trade up. So NASDAQ sorry, S&P, NASDAQ, and Dow all have different circumstances as far as the Globex range compared to the daily ATR. Now, Russell, using the prep screen zone, we took a small trade off of this morning in the pre-market. I was able to grab $100 off of that trade, and now we have a prep screen zone, a new prep screen zone, 1961, 1949. Okay. Now the Russell is kind of doing its own thing at the moment. Outside day, prices gapping outside the prior session's range. Okay, now gapping outside the prior session's range, it's usually a gap and run. Wow. Between the 4 equity indexes, we've got quite a mess as we're starting open. Okay. So we have to be prepared that markets are uncertain as we're collecting the pre-market information. S&P, again, we're looking for the gap fill, price to pull back down. We are currently futures and cash are balanced right now. Okay, so there's no futures not oversold or selling at a discount or selling at a premium at this moment. The only thing we're expecting is a gap fill, and we have kind of a middle range for the Globex. Okay. Now, having said all of that, let's keep moving forward here. VIX volatility index in the pre-market is down. Let's bring that back up. Actually, I'm just going to look it over here. 1865 in the pre-market VIX. Okay. Advancing issues over declining issues, tick. We'll see that as the market opens. Crude oil. Let's adjust this so we have a slightly lower Globex low. We are in a controlling swing. I mean, it seems like the swings are getting smaller. Okay. We had a controlling swing up, and we're looking for price to, let me do that. We're looking for demand zone within that controlling swing up, 84.53, 84.24. We have the leg base group of candles. We have it in a buy territory. As the open range breakout trade, when we're taking open range breakout trades, we compare the Globex range to the daily ATR. If the Globex range is wide, which it is at this moment, then we're looking for the bull trap or the bear trap in this case as a trading strategy. Okay. Now, if the Globex range is narrow, then the open range breakout trade is very high probability you'll see some success. If the Globex range compared to the daily ATR is in that middle range, between 40 and 70% of the daily ATR, then we're looking at a very choppy market condition. We wait a little bit longer for price to return to a supply zone or demand zone. Today's scenario. Globex range is wide compared to the daily ATR, 70 to 100% of the daily ATR. Okay, so we are looking for that bear trap, 84.53, 84.24 as price comes in. Now, taking a look at the leg base group of candles over here, leg candle leaving the zone is bigger, so we expect price to go a little deeper into that zone. Okay. So you'll have to adjust the time frame up or down to get the actual leg base. Okay. All right, looking at all the NASDAQ stocks together, NVIDIA up 485, Tesla's down $4, Netflix up slightly. Okay, so we're seeing pretty much a mixed market around the top large market cap weighted stocks on the NASDAQ exchange. Okay. So with a mixed market and what we saw over here for the NASDAQ, we have a narrow Globex range. So we're looking for a bigger running trend. less resistance to the upside where we have large pockets of points, okay? Large pocket of point is a light volume drop or a light volume rally, and price usually recovers going back through those areas. A perfect opportunity would be to see price fill the gap, drop down to the prep screen zone as the bearish sentiment on the pre-market indicator, looking for 17,700 area, 17,620 as that prep screen zone, okay? Take note that there were several of the prep screen zones that were updated today, okay? So what we've had come out today, not making much of an impact, housing starts, Fed Speaker Philip Jefferson, and industrial production, okay? All of those are out now. All the equity index futures are currently below the 50-day simple moving average. This is bearish conditions for a lot of the retail type traders. Bank earnings moving the indexes in the pre-market, and the bank index, some of the earnings that came out caused the pre-market to show very strong move up or a strong move down, but the lack of volume is what's causing a lot of that big price move. All indexes are an outside day, currently gapping up inside the prior sessions, which leads to a higher probability that the gap will fill. So as they're gapping up, we don't want to go long. We want to wait for price to come back, fill the gaps, and look for the demand zones in those areas. Stocks in the pre-market were on lighter volume. United Healthcare, we just talked about, up over 7%. And let's take a look at another supporting piece of information, which are, look at the Qs and the SPY are not gapping up much at all, okay? 21 cents on the Qs, 70 cents. So there's on the SPY. So there's not a lot of bullishness coming into the market, or we see much bigger gaps, okay? Now, as we look around at the equity indexes and the 10-year, 5-year, and 30-year in the pre-market, as we're getting 6 minutes away from market open, the 10-year, 5-year, and 30-year are still moving lower. These tend to precede the equity indexes by, well, yesterday it was about an hour and 20 minutes prior to the equity indexes following. Okay, so again, some of the equity indexes, we're going to look for the gap up and then look for that bear trap as we talked about on the Dow futures. Okay. Back here. So we always want to monitor what the 10-year, 5-year, and 30-year are doing in the pre-market, especially if the equity indexes are moving higher at the moment. The bonds and the notes tend to move, or as they're moving lower, we're expecting the equity indexes to follow. Now, bonds, notes, and the bonds and notes, as far as they go, they're still moving a little bit lower, and then we're going to use the FX markets to get an idea what they're doing. So FX follows what the bonds and notes are doing. Okay, they're still kind of in limbo at the moment, with Canadian dollar being the lower one. Now, if the bonds and the FX markets start to move up, then we will see the equity indexes move up. They all move correlated, but sometimes the equity indexes, because of the banks and institutions completing most of their order flow in the between 8 a.m. and 11 a.m. Eastern, okay, as the banks and institutions are completing that order flow, we have to allow the indexes, or not allow them, but they will start to, they will lag what's going on here, okay? As the banks and institutions satisfy what the companies need. So I've already entered a trade on bean oil. Now, bean oil is another one as we're looking for the market to open in about 4 minutes. This one will be a trade opportunity. We also have the rough rice is in a supply zone. Now, the agriculture products are halted until the regular session opens, so they're not moving at the moment. Soybean meal, looking for a breakout either to the upside or to the downside, okay? Right now, price is inside resistance and support. We call that the dead space. So looking for a breakout on soybean meal above 347. Want to take a quick look out at wheat. Okay, wheat coming down, looking for that support. Soybean meal, we just talked about. As price does break out, we want to be fully aware that we have some speed bumps over to the left, okay? Now, sugar beets, I have delayed data on this one, but it has made a nice potential V shape, okay? Notice the steepness of the drop. If we're looking for a V-shape reversal, then usually the Fibonacci extension that it goes down to will be 224, 2618, or a 314 extension. Okay. So sugar beets, if you're trading those, first area to look for a bounce, it would be 19. And then we have 1834 and then 1743. Okay. Now, V-shaped reversal are really good trading opportunities in as much as you get a strong bounce back off of that, usually up about 78% of the move down, okay? So we're looking for a significant move back up once it achieves these areas. Now, again, I'm on delayed data on this one. Soybeans right at that support area, okay? Just bouncing off of that at the moment. With the demand zone, 1147 by 1140 down below in the buy territory. We've already talked about rice. Rice has had a very strong arrival. Forex Factory website down due to technical difficulties. Interesting. All right, so rough rice is out there. Corn, kind of in the middle of that dead space, so no real good entry on corn unless it comes down and hits the support. Breaking that support, we have a large pocket of points down till we get to the zone, okay? So we want to monitor where that support level is at. Price breaking 421.58. We could look for a significant drop of almost 9 points after that down to where the buyers are located. And I'm currently in the bean oil trade at the moment. We're up a little bit on it, doing that in our prop account, okay? So bean oil did come back down to the buy territory. Came deeper in, we had a proximal line bounce. When you look at the leg base group of candles, you will see that you have the ability to take this, the price will go deeper into the zone. You can use the zone twice, okay? So let's set this one up here. We're trading the May contracts. And trading the May contract, I'm gonna look for a long entry at 45.05.
Order rejected.
Okay. So I'll come back in and post that in just a moment. Okay, so markets are open. Just now. Let's see what the NASDAQ's doing. NASDAQ has filled the gap. Okay, Dow just creeping out there. And Russell coming down to our prep screen zone. Okay. So again, our equity indexes are mixed. The 10-year yield is moving higher. And the dollar is moving higher. Okay. So that'll give you a few ideas of what we're looking for in our pre-market. and how we're setting up our day. Just waiting for the markets now to settle out. So what we're going to do now is close up our YouTube live session. And we'll see you guys over in the, if you're already in here, you don't have to do anything.